So I've been on 4 sales calls this week, all with prospects ranging from about $3 million in sales on the low end, and on the high end, about $25 million in sales annualized. All types of contractors, professional service, and the like. And I'm getting the same questions over and over again as these business owners are looking to scale their companies. And they keep, in some way, shape, or form, asking me, well, what are the things that I have to be doing or that you're going to help me do as a fractional CFO that are going to help bring some clarity to my financial position? And the way that I would summarize everything that we do, it comes through 5 components of financial control. So bringing your business finances from chaos to control is going to take 5 things. The first one is going to take profit, right? And we have to understand your profit. Profit's not the be-all, end-all. You can have profit. You might not have cash. We'll tackle that second. But you need to have profit. You have to have a profitable product or service. We have to be able to measure your product or service and its level of profitability. We'll talk about things like gross profit, which is your sales less the cost of doing business or cost of goods sold, the cost of bringing your product or service to market. The second component of this profit is going to be measuring operational profit, or EBITDA, earnings before interest, taxes, depreciation, amortization. It's a fun word just to simply talk about, or metric to simply talk about your overall profitability of the business as an operation. We'll even talk about net profit. But what we want to understand is our gross profit, then less all the other costs it takes to operate your business, your overhead, your insurance, your indirect staff, your marketing spend, your cost of debt service, things like interest expense. That's going to give us your operating profit of the business. So profit is the first component. The second component is cash. When it comes to cash, we all know that cash is the oxygen, you've heard me say that, of your business. Without it, you can't live. But when we dissect cash, we need to look at it in 2 ways. One, cash in terms of visibility, and then the second is levers. So cash in terms of visibility is we have to create some type of forecast. We have to know what cash is going to be 13 weeks from now, and we have to have a relatively a good understanding of what cash is going to be 6 months from now. With all the potential what-if scenarios and possibilities that you're going to put in your business, we know it's got to be dynamic, it's going to change, your business is going to change, the environment's going to change, but we have to have some level of visibility into the future of your cash. And then secondly, as it relates to cash, we have to have some understanding of how to leverage cash, meaning we have to be able to change your cash position from where it is today. We're going to do that by looking at things like cash conversion cycle. When you put $1 at play in your business, how long does it take to come back out the other side, hopefully with like $1.50 attached to it, right? Some kind of profit. But that takes a process. You're going to have accounts payable, accounts receivable, you're going to have inventory, you're going to have work in progress. You have to deploy that dollar. It has to go through a process to deliver a product or service, and then you have to collect it back on the other side. That's called cash conversion cycle. How long does that take? And we want to be able to shorten that. System cash conversion cycle, we might have things like, your days sales outstanding, your days payable outstanding. These are all things that we can start to track and measure, and we can use these as levers of cash in your business. We might even go at external views of cash, such as lines of credit and other working capital. These are all elements that will control and dictate your cash position. So you have profit and cash as the top end of the pillars or the components of bringing financial control to your business. All right, so just to summarize, we have 5 elements or components to financial control. The first 2 are profit and cash. We talked about both of them. The third one, I should say, is going to be people. People are going to be an element of financial control, and I'm going to break people down into 2 subsets here. One, your team. I'm talking about your internal team, your bookkeeping, your accounting, your office manager who might run payroll and collections and sending out invoices. You got to have the right people in the right seat, and you have to have the right accountability within your team to make sure that you have financial control happening. This is your internal team. They're on your team. They're working in your business day in and day out. And then the second component to people is going to be your advisors. That's the second layer, and that could be external, right? This could be a combination of many people. For a growing business that wants to have control of their financial future, you're going to have some level of advisors. Just to name a few, you're going to have your CPA, your tax accountant, right? To manage and understand what's happening from a tax perspective and compliance. You're going to have potentially a wealth advisor. You're going to have potentially a fractional CFO depending on the size of the business. And I'll just harp right there, that fractional CFO is going to be on your team, but not a W-2 employee. They're going to be in that advisory capacity in the people component of your financial business. The next one, the fourth element or the fourth component of financial control that's going to alleviate all the chaos is going to be systems. Now, systems are driven by people. We've talked about people, but systems are independent of people, meaning that they exist to bring consistency and repeatability to your business. I'm going to break systems down into two components. One, your accounting system, and then number two, your reporting systems. Your accounting system is going to be things like QuickBooks Online. Maybe you're using an ERP system like NetSuite or Microsoft Dynamics. Potentially it's Foundations if you're in the construction space, or some manufacturing ERP like JobBoss. This is the core of your accounting system. Within the accounting system, you're going to have your inventory management modules. You're going to have your job costing. You're going to have your general ledger. And these are all components that have to be managed and organized within your accounting system. Your accounting system should lead to the second component here as it relates to systems, which is reporting. Now, your reporting is something that can be within the system, but also external of your accounting system. The second element of systems is going to be the reporting. And that reporting is going to look a lot like your accounting system, but it can also include external types of reporting as well. Think of Microsoft Excel or Google Sheets. It doesn't matter. We're not here to talk about the mode of the reporting, but what should be a part of your accounting system and business systems as it relates to reporting. We're going to have things like profit and loss statements. We're going to have elements like balance sheet, statement of cash flows, financial projections, cash flow forecasting, work in progress reporting, inventory reporting, inventory reconciliation. These are all, depending on the industry, but these are all components that should be repeatable that run the reporting side of your business systems and your financial systems. Last but not least, so I'm just a quick recap. You have profit, cash, people, systems. Last but not least is your position. So financial control requires understanding of your financial position. Your financial position can include many things, but we're going to talk about three today. Number one, your enterprise value. Number two, what does exit or succession look like in your business? And number three, tax planning. These, again, there could be many things here, but we're going to just talk about those three. Enterprise value from a business perspective and financial perspective is going to be what kind of retained earnings are in your business and what kind of multiple on the operating profit that we talked about earlier can your business sustain in the marketplace relative to overall value. So if you have an EBITDA of $1 million and in your particular market, your business could be worth 5 to 6 times, 7 times, 8 times that EBITDA value, that's going to give us an idea of enterprise value. The reason that's important and the reason we want to understand that from a control perspective is as we're building your business and understanding how to lay out your financials, we want to understand what the overall impact to these changes that we're going to make and the progress that we're going to make and the growth that you're going to have, how does that impact the enterprise value of your organization? Next, we're going to move down to exit and succession planning. We're going to take that idea of enterprise value, all the things and the inputs that we're doing to improve that within your business, and understand that at some point you're going to look to exit and or have a succession to someone, maybe a family member in the business at some point in the future. When that happens, we need to make sure that the business is set up to have that transition happen smoothly. Again, going back to advisors, there could be other folks in your business that you're surrounding yourself with to make sure that this is handled with criticality because it's a huge potential transfer of wealth. As a fractional CFO, we want to be in place to make sure that your financial systems, your operating profit, your accounting systems, the people on your team are all set up to maximize what your overall enterprise value will be and thus influence the potential exit or succession that you have from your business. And the last component is tax planning. From a positional perspective, we want to understand how does your financial position impact your personal and business tax scenario. And this is something that, again, has to be repeatedly looked at through the lens of forward-looking financials to make sure that we're understanding what do estimated tax payments have to look like, what kind of tax deductions and tax strategies should we be deploying in your organization to make sure that you're benefiting from the IRS code to make sure that you have are protected from a liquidity perspective, but also maximizing, and I should say minimizing, your tax burden as it relates to being a business owner, while not negatively impacting the operational component of your business. And I see that happen all the time. Business owners feel like they're deploying some crazy, awesome tax strategy, but they go into incredible amounts of debt doing so. They reduce their cash balance on their balance sheet, which just hampers their ability to continue to operate in the following year, all for saving some level of tax. But that tax saving that they've now realized in a particular year has cut them off at the knees, and they're effectively rendered useless in developing profit in the following year. So which is the bigger loss? And these are questions that have to be answered. Only one way to answer them is to look at forward-looking financial projections. But all these components, just to summarize, profit, cash, people, systems, and position make up the 5 core components to financial control, bringing your business from chaos to control as you scale your business.